What's going on, everybody? Welcome back to another live stream here today inside the boiler room. So today we do have some pretty good stocks to watch. What's going on, Jeremy? Good to have you in here, brother, as always. Let me make sure my volume's down. There we go. So we should be good to rock and roll here. Mr. Cornut, Laura, guys, thanks for joining in. Sorry I hopped on a little bit late here, just getting some things organized. But today is a huge earnings day. There's a lot of stocks gapping down, and there's like one stock gapping up from earnings. So there are a lot of things here gapping up today. So today should be a pretty good day in the trading world. So let's go ahead and start sharing the screen so you guys can take a look and see what I'm looking at here. All right, let's do this one. Let's get it going. Let's get it going. All right, so the first thing I have here on the watch list today, first we'll talk about SNES, the penny stock, because it is popping up here this morning. So if you look right now, SNES has already moved from $1.20 to $1.67 pre-market. There is also some news on it this morning. There's also some news on it this morning that they got some contract to do some work in the state of California, looks like, with some pest management. So anyways, at the end of the day, right now, SNES is popping up. If you look at the chart, you can see that from yesterday, it popped up to 190, and then it faded out all day. So for a fact, there was a lot of people that were shorting the stock SNES yesterday. Now that SNES got some positive news this morning, it's starting to pop up. So there's probably a mix of people buying long, and there's probably a mix of short sellers getting squeezed out. Good morning, Nick. Glad to have you on here, brother. Appreciate it. So for those of you guys tuning in on Facebook today, right now I'm currently on YouTube, so I do both live stream here and I'm on Facebook. So I have a YouTube channel, so if you want to see the screen, you can always join on the YouTube channel. But regardless, with SNES, it's probably the major penny stock that everybody's watching today. So more likely than not, that's the penny stock that you should watch today if you're into trading penny stocks. So if you are, chances are you want to focus your attention on SNES today. Again, yesterday it had a lot of short selling taking place. So today it's very possible we can see this pop and squeeze up. All right. So next one here, I'm going to talk about RRGB. RRGB is it's Red Robin. So if you guys have ever eaten at Red Robin, pretty good food. Oh yeah, real quick, let me talk about SNES real fast about this real fast. 1 second. Let me hop back here for a second, guys. Top of the day to you, Governor. Yes, sir. So with SNES, oh, that's the wrong one. That's SNES. There we go. So a lot of the way, so realistically, what's going to happen here is it's really high right now. So more likely than not, we'll see it pull back. Maybe in the beginning of the day, people will try and push it down again, and they might get squeezed out again. But right now, you got to think to yourself that more likely than not, right now, it has a lot of resistance at 170. If you look at the $1.70 mark, that's the high pre-market. And if you go straight across into yesterday's trading, that's where it had a lot of choppy trading going on with SNES. You can see it going back and forth, back and forth, back and forth, right in that $1.70, right in that $1.80 range. So right now, that's the current resistance. Then after that would be 190. So to see it break through yesterday's high a day price, that might be a little bit much. But, you know, a lot of people are most likely trading SNES for the break of the pre-market high today. So do I think it's going to be the best play? Not really, but I think it's the best penny stock to watch today for right now. All right, so then on to the next one. So let's now head over to RRGB. So RRGB is Red Robin. Yesterday, before aftermarket trading, it was $57 a share. All right, so $57 a share, it gapped down to 46, and now it's at about 47. So right now it has about a $10 gap down, so pretty big gap down. This is a stock that had bad earnings, so now we're going to watch this. It's very possible that Red Robin continues down today, so there might be some continuation to the downside, but also note, if Red Robin does not break through the aftermarket low of about 46.77 and it holds support there, it's possible we could see this squeeze up a bit. And if it does, right, if it holds support, Red Robin, that is, if it holds support, and Red Robin's ticker symbol is also RRGB. So if it can hold support right around that 46.70 area, then I might look to get long on it. And my target, if I were to go long, would be right here at some of this pre-market resistance, which would be about $50.12. And then after that, you'd be looking at $51.76. Do I think it's going to squeeze all the way to 51.76? Probably not. That would be a big move from 46 to 52. That's 6 points. Yeah, probably not. Probably not. But if it does not go long off of 46.70, I'll probably look to short below 46.70. All right. Yeah, exactly. SNES already squeezed up. Lost in thoughts. I don't follow JNUG. Not that I couldn't learn how to trade it. I just don't follow JNUG and JDST. I never follow those stocks, so I never really cover them, to be quite honest with you. So the next one on the list would be Tiffany. So I'm not sure if you know Tiffany & Co. Tiffany, if you're not married or if you don't have, you know, if you're not married or if you're not already divorced, right? So if you haven't been divorced and you don't currently have a wife, then chances are you probably never stopped in Tiffany & Co. because you'd have no reason to. So hopefully you're still married and hopefully you're not divorced. But I guess both of those could be a bad thing. Either way, Tiffany & Co., they've gapped up from 102 all the way to 118. So they're up almost $20 a share this morning. That's a big gap up. Think about that, Tyler. So, you know what I mean? So it's up almost $20 a share. That's huge, right? So let me put it into perspective for you guys, right? So imagine if yesterday you had bought Tiffany's, right? So let's just say you bought long Tiffany's. You'd be in, who knows, right? You're in $100 a share. Either way, imagine being in Tiffany's yesterday or maybe a couple days prior to this gap up, and now you're up $20 a share. Do you think that you're not going to sell just a little bit to lock in some profit? Probably. So that's what happens a lot of times with these really astronomical gap ups, especially on higher price stocks. You'll see that they gap up really big. And then a lot of times right before the bell or when the market opens, they'll actually pull back and dip down because there's a lot of people selling it because they just made a ton of money overnight. And also a lot of short sellers will notice that big gap up and then they'll try to short them down as well. So right now we're going to watch Tiffany's for a short out of the gate in anticipation that there's going to be some profit taking. That's what we call a profit taking wash, is when you see a big stock go up and then it dips, even on good earnings or just a good news. A lot of times it's profit taking because, you know, people are making a bunch of money. So Tiffany's right now we're sitting up at $1 or 118, big gap up. So let's watch Tiffany short. If I had to pick an entry for it, I don't even have one. This right now isn't telling us an entry. My initial go-to kind of strategy here would be to see if it pops up to 118 and consistently kind of sees resistance at the whole 118 mark and then open a short with a target of, you know, every whole dollar mark, 116, 117, etc. Tiffany's is a bigger price stock, so you're going to be dealing with the spread of like 20 to 30 cents. So if your accounts can't handle 20, 30 cent spreads, just be careful of that. All right. Is AVGR running right now? All right, I'll take a look. AVGR. Wait, oh, that's not it. AVGR. Oh, yeah, I guess it is. So another thing, here you go. So thank you to Mr. Mike Taylor. The stock AVGR, another penny stock. It's currently, I don't even know what it's up, honestly. Let's see. What is it up? It is up 40. It's up about 44%. Excuse me. It's up 44% this morning. So that is on FDA approval news. We're not going to really touch too much on that, but you can watch AVGR, penny stock that's up 40% this morning pre-market from FDA. Is that what it? Yeah, they got FDA clearance of next generation Panther's device. Whatever. Anywho, right? So AVGR starting to pop up here. All right. So thank you, sir. Thank you. Now another one here is, so we did Red Robin, we did Tiffany's. We haven't done Target. Let's talk about Target. TGT. Target is another one that gapped down. Target gapped down from about $75 all the way to $69. And right now it's at 72. So right now it's down about $3 a share, and it's already kind of trickled back up pre-market. So if you look at my screen, you'll see that it has already moved back up pre-market here. You can see it's starting to trend up. Right now, this could very easily trend up, and then when we get to the bell, we might see it roll over and dump. So I'm going to be watching Target short. So right now it's already bounced back pre-market, and it's holding resistance right around the 72 area. So what I would like to see on Target is when the bell opens, maybe see it squeeze up just a bit, not a lot, but just a little bit. And let me do something here. I would like to see Target squeeze up just a little bit and maybe reject off of the $72 mark and then open a short down there. Okay. So that's another good one to watch. Next one on the list here is DY. So this is a higher price stock of $92. This is a good one, ladies and gentlemen. I totally forgot to mention on the live stream yesterday, and then I forgot to watch it myself yesterday like an idiot. But it went from 100. What did it do? Hold on. It went from like 117 all the way down to $92 yesterday. So you do the math. 117 to 92. That's 8. That's 17. What? That's a $25 gap down, right? Yeah. 8, 3. Yep. That's a $25 gap down yesterday on the stock DY. That's freaking huge. The thing lost $25 a share yesterday. And if you look at it right now, it's currently holding support right at about $92. So if $92 can break to the downside, we might get continuation. If you look at the yearly chart here, right? If you look at the yearly chart on what am I saying? If you look at the yearly chart on DY and you go across, you'll see that there is a really strong support built up through all out the $92 area, 92.30s, 91.40s, 91.50s. So right from that 91.50 to 92, right? So you have about a 50-cent wiggle room that the stock DY is now sitting on. So it's sitting on a huge blanket of support right now. So think about it. The thing dropped $25 a share yesterday. There was, for a fact, a lot of people short selling the stock. If the stock does not go lower today, short sellers will most likely cover up, causing a squeeze to the upside. So not only are we watching DY long, but we're also watching it short. So short below 92 possibly, but there's also a lot of resistance throughout that area. So if we go short below 92, we'd run the risk of still getting squeezed. But we also, could have a good trade there. So we're going to watch DY short below 92 and then a possible squeeze on it today as well. All right. And then I'm going to talk about just two other stocks here, MU, which is Micron. If you look at Micron on the daily chart, it's extended and it closed with a red doji. All right. What is this telling me? It's telling me that we might have a red day here on Micron. It's trickling up and it is moving up pre-market, but it still has yet to really break through any of the aftermarket resistance. Right now, it's rejecting off the $59 mark right in that area, $59.20, $59.15. So it's rejecting off of that $59 area. So if it cannot break back through $59.20, $59.30, the whole aftermarket resistance, it's a strong chance we could open up a nice short there on MU. All right, so going to be watching MU short today. It is also, but also note that MU has been having some really good news lately. So if you're shorting it, you're technically going short against good news, which isn't always the best thing to do. So though technicals may point to a short, fundamentals, revolving around news and positive catalysts can make it a little bit more challenging to have your trade work in your favor when you're going against the hype, right? You never really want to be going against the herd. And a lot of times if you try and, whether or not technicals and the patterns point towards maybe a long or a short, if fundamentals like deals and contracts and positive news, are out and you're trying to short a stock, you're not going to have as much success for the most part. All right. Lastly, Tesla. Tesla is probably going to zero at some point in his life. Anywho, regardless, Tesla might squeeze today. So watch Tesla for a squeeze. That's all I'm going to say. The last time I told everybody to watch Tesla for a squeeze, it ended up ripping up 8 points in like 5 candles. So just watch Tesla for a squeeze today. That's all I got to say. It got shorted from 288 all the way down to 272 pre-market today. So from 288 to 272. You guys do the math. That's $16 a share that it dropped yesterday. That's huge, right? Could be a lot of short sellers that get squeezed up on this one, or a lot of people trying to dip by and stuff like that. So anywho, that is all I have for you guys today on the watch list. Tyler, whenever I'm short, I mean, to answer your question as best I can, I'll be looking to, I mean, I short on 1 minute candles is the question. When you open these short, so Tyler asks, when you open these short positions, are we looking for a few one candles or 15-minute candles before lunch? So no, you never want to trade during lunch. That's 1. 2, it all depends, right? I trade on a 1 minute chart because I just traded for so long. I can understand the charts pretty well. So for some traders, it's best to look at a 5 minute chart and sometimes even a 15-minute chart because they can't clearly identify the patterns as easily on a 1 minute as they may be able to on a 5 minute. So what I'm really getting at here is if you don't seem to have the knowledge or experience to find the setups on a 1 minute chart, then try looking at a 5 minute chart, because what can happen is you could be looking at like a, hold on 1 second here. So what can happen a lot of times is you could be looking at, you know, a 1 minute chart and it gets a little choppy and you can't really read it very well. But then when you look at a 5 minute chart, things might become a little bit more clear. So to answer your question as best I can, Tyler, pretty much all I do is I trade 1 minute time frames, 1 minute candles. Pink Penny, I stopped trading usually at 11. Anytime before 11, I usually don't trade after 11. Every once in a while I do, but I've been taking it upon myself to stop trading at about 10:30 to 11 every day. I mean, technically speaking, you should only trade the first, realistically, you should only trade, if you're day trading, you should only be trading the first 30 minutes of market open, and then that's it. Because the best time to make money is the first 30 minutes. After that, it becomes harder and it's basically a waste of time. And that's another thing too, as day traders or as traders, the reason we do this job is so to make money, most importantly, but equally as important is to have freedom. You trade to not have a day job, right? So you don't want to sit in front of a computer screen all day long. So with that being said, that's all I got for you guys today. So I hope you guys like the watch list. I'll keep posting them here on your guys' Facebook group, Facebook page. Again, so thank you guys for tuning in. I do appreciate it. Is this the beginning of the correction? Possibly. You never know for sure, but like I always say, right? Like I always say, you can listen to someone as much as you want and they can be wrong all the time. So it's kind of like the saying, numbers don't lie, right? Because numbers don't. I mean, in reality, the only thing that holds true in any type of like philosophy is one thing, social studies is one thing, but at the end of the day, math does not lie. It's either you're right or you're wrong when you do math, right? So that's why the saying numbers don't lie holds so true, because it doesn't. Numbers don't lie. And one other thing that I can tell you is charts don't lie, right? You can go on CNBC, you can go on my YouTube channel, you can go on somebody else's channel, you can go on a blog, you can go on a website, Investopedia, FinViz, MarketWatch, blah, 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 blah. And they'll have a blog out or have a news release. Oh, the market's down 25 points. This could be the beginning of the crash. Oh, well, the volatility index is above 25, so that means people are getting more scared. So they're selling off some of their positions. This could be a catalyst that's helping drive the market down. Oh, Trump to start a new trade war with China. That's going to cause a market crash. Oh, interest rates just went up. That's going to cause a market crash. Inflation's been higher than it ever was. Economy's booming. Market's not going to crash. You're going to hear multiple different viewpoints, but at the end of the day, the one thing that does not lie to you is the stock chart. If the stock chart's going down, things are going down. If the stock chart's going up, things are going up, right? That's what you pay attention to. You pay attention to the charts because the charts do not lie. People lie, charts don't, okay? So that's what I got for you guys today. So thank you guys once again for tuning in, and I'll see you probably tomorrow.